Hey, welcome back, or welcome those of you who are new to the Freedom Income YouTube channel. So this video, I'm just going to show you a video of how you would trade a stock option, the option on a stock using Interactive Brokers platform. This is not financial advice, and this is just my personal opinion. I've been using Interactive Brokers for over 2 years now, and I really like them. The professional, especially for British citizens such as myself, the commissions and the fees are quite cheap. They're not dear, they're cheap, and they're super fast, super professional, very fast platform, fast executions, a great deal of instruments available for trading and amazing for shorting. Just really professional generally overall. You might want to take a look. Technical analysis platform is not that great on them, using them, but I don't need that. I've been using TradingView for a long time, so I'm used to TradingView, so I use TradingView for my technicals. So anyway, I just want to show you how to trade options, so let's get to it. First of all, you click on here. So this is the demo account, but the real account is pretty much similar. This is not a live account. I mean, it would be good if it is, if I had $1 million there in trading it. So here we go. We go to new window, option chain, and then this window pops up. You then, whatever it is, let's just say TSLA, Tesla, for example, right? You want to do Tesla, right? You click on that, click on Stock Smart, Tesla's comes up. And so this is it. Apologies for a sec. Okay, so this is it. So these are the dates. These are the expiry dates: March 19th, March 26th, April 1st, April 9th, and even more if you want, should you wish, right? So let's say you go for the December 2017, whatever it is. Right, now just a caveat, if you do not subscribe to the data, right, because with Interactive Brokers you need to subscribe to live market data, and that subscription costs you like $20 or $30 a month. You don't have to do that. I don't do that, actually. I personally don't. I personally just use an app called Webull on my phone, or is on desktop as well. In fact, Webull is better. You can use Webull in addition to just this alone. There's so much you can do with Webull. There's level 2 price information. There's analyst ratings. There's news and option pricing, live pricing, pre-market, post-market, after-hours pricing, instrument pricing. Everything's great. Options, you can only trade options during market open hours. So just when the market's open. Unlike stocks, which you can trade sort of pre-market, post-market. Interactive Brokers is actually really good for that as well. Post-market, pre-market, you get super extended hours of trading, really good hours, which can help actually over time a lot on the stocks, because sometimes they run pre-market and post-market, and it's useful, that it's handy if you can sell it for profit or trade it. So anyway, so just based on this, I just basically right now I'm using my Webull app. If you don't know how to operate Webull app, you can go to, I've got another video on my YouTube video which shows you that. So I go to my Webull app, I have to do it on my phone, so I'm just doing it. But just watch the other video and it all makes sense. And then you click on options, you click on Tesla, and then you click on options, and you click on this date that we're on, which is the December the 17th, which is here. I've just clicked on it. So call option, so current stock market price, I can see is 671.86. So ideally you want if you do a call option, you want the price to be a little higher than that. So maybe let's go for a 700, or even you can go, especially December, you might even be able to do bigger than that, like 800, 1000 even, because December is a lot of time. With call options, I tend to get more time if I can, although I do not do it if the premium doesn't make sense. Ideally you want to do call options, the more runtime, of course, the safer it is, right? Because you got more runtime. Even if the stock corrects, it's going to come back in time, likely, if you have time, right? So but at the same time, if you're buying a few months later and it's going to cost you like a few $1,000s more, then maybe don't do, you got to put the overall into perspective, right? Timing and expiry dates. So what I do now is, let's say I put 700. Let's just go for 700, right? Let's just go for $700 call option, right? Like just an example, because I just want to show you. So right now I can see that the price is $166.20 for that option, but of course you multiply it by 100, which then comes to $16,600, right? So let's say we're going to go for that. Let's go for this, right? 700, right? Which is a lot of money, right? I mean, you don't have to go for this kind of option. I mean, you could go for another one, but I'll probably show you another one after. But let's just go for this one, right? Call option here, right? You just click on this C. You see, you click on that C and close that, and then it will be here. Tesla, December. You see that that call option is now showing up there. So it says Tesla, December 2017, 21, 700 call. You click on buy, so these are prices there, but if you want live pricing, you can check Webull, which right now I can see is just under 167 to buy this one. So I'm going to put limit price, one option, 167, right? And that's going to cost about 160,000 sorry, $16,700. And always choose GTC. I always choose GTC. So again, you can only trade it during market hours. So then you just press submit, and then you just override, transmit, boom, right? Now sometimes if that doesn't fill, is because the price has just gone up, right? So very fast. So you can put a higher, because your limit price has always got to be higher than your buy price, than the options price, right? So update it to 170. Okay, use here. Okay, done. So there we go. So that's it filled, right? 700 call, 165. So that cost $165.20, which well, for that option, right? But each option controls 100 contracts, so that's really $16,400 value, right? So that's how you would buy a call option, right? So let me just show you. Let me just show you one more. So again, you go to new window. You know, the thing is with these kind of the more expensive the stock, the more expensive obviously the call option is going to be, right? So these blue chip options is going to cost you a lot, especially each option controls 100 shares. You know, it's really going to, it's the kind of thing that you need big capital in order to be able to trade. These kind of blue chip stock options. So this is where I want to show you some penny stock options, which are probably worth it, right? Because they're cheap. I mean, the premiums are super cheap on some of them, right? So let me just check. So let's just off the top of my head, let's do CIDM. I'm just checking if they have options. Nope, they don't have. I'm just seeing, because not every CLSN, not every single stock has options, right? CLSN has options and they're pretty good. So right now we click here again. Right, again, if you were starting from scratch, let's start from scratch. You go to new window, you go to option chain, this window comes up. Here, you type in the ticker symbol, which in this case, let's say is CLSN. Click enter, hit enter, click stock smart. Make sure you're on CLSN here now. And then again, the more time the merrier, right? So, but it doesn't. You don't have to. You could scalp trade it. You could day trade it. If you want to day trade it, you can get one that's for, options are usually on a Friday, so you can get one that's for like the 19th, which is this coming Friday, right? The expiry date's usually on a Friday. So if you get it on for this Friday, if you think it's going to rise, then you just day trade it. That's okay too. But if you don't day trade, you want to swing trade it, you want as much time as possible. So for that, let's just say I'm going to click. Let's just say I'm going to click on 16th, right? July 16th, right? Because that might be that's probably plenty of time for a stock like this to run. Especially, but at the moment, there's kind of a market correction going on at the moment. But just ignore that. This is really showing you how to trade options. So let's say you go for that, July 16th, and you basically on Webull, I'll click on the options, I'll click on July 16th, I'll look at the option price. So right now, I can see the $5 call is going to cost 55 cents. So I'm going to pick $5 call option. You can pick $2.50 strike price as well if you want, but $5 is okay. I'll pick $5 strike price. And again, you can close this or you can just minimize it. Click on buy. Make sure you got the right one. CLSN, July 16th, $5 call option. Brilliant. And 55 cents. This is actually live now. But if you don't have the data, it might not be live. It might be a bit behind. So you want to check Webull. You don't have to subscribe again because Webull is literally $2 a month to subscribe, and that's like literally that's practically free. So from there, I put 0.56, just a little bit above the price, and click on GTC. So one would only cost $55 because it's 0.55 multiplied by 100. So you might want to do 10 or whatever, depends, up to you. GTC, submit. Okay. Again, if it doesn't fill immediately, it's because the price is not, you haven't offered a good enough price. You just raise it a little bit. Like I said, the price is not live. So let's just check Webull with it. So 0.60. There we go, 55. So it filled, right? It filled at 55. So bought 10 CLSN at 55, right? Because it should be 55 because Webull says clearly is 55. So it should have filled at 55. So maybe it just takes a bit of time, but that's okay. It's okay. The limit price basically it's just a price that the limit price has always got to be higher than the current price, market price, or the same as the market price. It's not going to fill if you put it lower, unless if the market price drops to that, of course. Ideally, so it doesn't, even if you put it at 60 cents, it doesn't mean it'll fill you at 60. It'll fill you at the best market price, although you want it to put the limit price as close to the market price as possible to get a better price. So from there, that's it bought. So now we own 10 option contracts of CLSN, which only cost $525. So you see, some of these penny stocks, the option premium is really, really cheap. So if you don't have massive capital, you might want to be trading some sort of cheaper stock options. Something like Tesla, even one stock option is going to, like, for that much runtime, is going to cost you like $16,000-$17,000, which is quite a lot of money. So more expensive, the more it's going to run. And so that's how you would trade options, right? And to close them, just to finish off, again, options are more risky because time is against you. Just want to say this, a caveat, right? Time is against you is more risky, but if during the right bull market conditions, and during the right market conditions, and considering that we got you get in on the stock option at the right level, so you're not chasing it, you're not buying it when it's super hyped, there's a good chance that will run, right? That there's a good chance that's going to run quite a lot, and if it does run, you can sell it. You can sell it way before that date. Okay, it doesn't mean you buy it for July the 16th, for example, for CLSN. You have to wait for July 16th. No, even if at the end of today you're happy on the same day and you got profit, because as the stock price goes up, your options rises more. So basically your risk is a little higher because of time. However, your reward is much higher as well. So if the stock goes up by 10%, the option doesn't just go up by 10%. Usually it's like 20% or 30% or sometimes even more. So your options is much more exposed in the stock, but equally you got time against you. And if by that date the option is losing, and the price hasn't gone above your strike price, and you're losing in the option, then the option could even expire worthless. Meaning by that date, if you're really, really bad on the options, for example here, like the value is like say 50. If you don't close it by the time it expires, you pretty much lose your entire premium. So everything you paid for is lost, right? So you want to be with options. Once you're happy or satisfied with your profit, maybe you want to close it because the time is against you. So just to show you that, and also just to close it right now, look at this. Tesla is actually running well. So to close it, you just right click it, close. You click close again. Again, you go to it, just automatically comes up, right? Again, you get limit price. You do it you check the limit price at the moment, what it is from Webull. So it's around about that. So 163. So if you just click on 163 there, boom, like that, and then you click on GTC and you click that, and then you click finish. Boom, there, see? So 166. So actually closed a bit higher than 163. So it closed at 166. So that's how you would close an option. So that's that option closed off. You bagged whatever profit it was, which is about $100 there, realized profit, $100 on the Tesla option there. and then you closed it, and then this one is still open, and to close this one as well, you just do the same thing. So that is how you trade stock, or that's how you trade or buy a call option using interactive brokers, right? That's the case of a call option. If you want to do a put option, etc., you just do the opposite. You check the Weibo again, and then you do a put option, so it's just the opposite. So yeah, thank you guys. If you have any questions, just ask. Subscribe to my YouTube channel if you haven't already. Thank you and happy trading.